All right. How you doing, free folk? This is our third segment of our Training 101 section, and this is setups. The basic setups that I like to take, and I have them in order of preference, so we'll just talk about that a little bit. So this one is a trend reversal breakout, this setup. And this setup starts when a new trend is about to occur. So here you see that we have a downtrend in the market, and then we come down and we make this low, come back up and make a lower high. So if it's going to be a long trade, we need, it makes a higher low. So if we're going to go long, if we're expecting the market to be bullish, the first move we need is a higher low. That's kind of a burden, eh? There we go. The first move we need is a higher low right here. And so you see the move down here. Here's the low, comes up, makes a high. Here's a higher low. As soon as you get a higher low, you know that that downtrend has broken. And there are two entries. This first line I demonstrate right here is your more conservative entry. Conservative in that it has a probability of creating a new high if it breaks this previous pivot high. So you could take your entry there, put your stop right around there. Theoretically, you want to put your stop right here. Give yourself plenty of room if you're just worried about the setup, because in theory, this setup should not make another low. So we should go up, make a higher low, and then continue to a higher high. So if it makes another low, then the idea has broken down, and that's where you should take your stop. A more aggressive move, meaning that the probabilities are less that it works out than it is here, but it is still a high probability transaction, is taking this low. So, and it's hard to figure, but this one is a kind of a good indication because it has a hammer. So you see this low, you take the breakout of this high right here on this bar. This bar breaks this high right here. This is your entry. Your stop goes right here. You reduce the size of your risk by taking this, but the probability that the trade is not going to work out is a little higher than the probability of the trade not working out here. So point in case, if you look right here, we move up, we make this high, we come down, right? We make this low right here where my little pointer is pointing, and we create a hammer right here. And I would have put an entry right here, and it would have triggered. I would have been in the trade, and my stop would have been down here, boom, and I would have been knocked out. So that's just a demonstration of how you're taking a little more risk here. Although the risk is smaller, you're taking a little more risk on this entry as opposed to this entry. See, so if I held this entry on this hammer, obviously I never would have taken an entry. But this doji, it would be more enticing if it was a hammer, and that's what might have enticed me here, because it's a fairly strong body up to the upside. But on this doji, I would have taken this break, and that's why you take all of them to try to get into that trade. On this break, my stop would have been here, and I would have moved up. I probably would have had a third of my position off right here, and then followed it up and maybe trailed the second third, and I'd be out on the second third right here, and then carry on to my other third. So this is a trend reversal. Again, you need the movement down, you have your low, and then you make your higher low, and you could choose either an aggressive entry or a conservative entry right there. And this is I think the trend reversal breakout for a short. So we have the directional move that we want to reverse. This is a trend reversal breakout. A directional move that we want to reverse. We make the low here, right? We come up, Here's our low, here's our high, here's, I'm going backwards. Here's our high, we make the low here, we make the lower high here, and then your conservative entry would be at your low, breaking the low. That would be the conservative entry. This one retraced a little bit and then went back. So if you took this entry, your stop would be here, because in theory, the trade should not go above here, right? Your more aggressive entry would be right here, breaking this low, right? We would have taken one off here and moved to a stop. We probably got stopped out, would have gotten stopped out on that one, and then re-entered breaking the low, and you could follow it all the way down. So this is a trend reversal breakout to the downside for a bearish move. What else do we have to say about that? Okay, so the next one is a micro trend breakout, which this is a very good play. And this one is more of a continuation play, or this is precisely a continuation play. So you have a directional move here to the upside, and then within this directional move, you get a micro trend to the downside. And you can see it, here's the high, here's the low, here's the high, here's the low, and then boom, it breaks out. So you draw a line across your two counter highs, they're counter to the trend, put your line, and boom, it breaks right out. So really just one entry on this. I wouldn't look for a short entry here. It's not a micro trend breakout until it breaks the pivoting high. So you have one entry on your trend line. Your stop could go right down here. Your stop could go below the previous day's bar, bar, and then away it goes. And then you can get aggressive with your stop and move it right up to your trend line. But it's probably going to move for a one-off right away. And then for the inverse, on the downside, you would do the same thing. You would have the downward move. You would see the change from low to high. You make your trend line, and then away it goes to the downside. So that's a trend reversal breakout. And that one I'm pretty fond of. But you don't want to take that if the market's really extended. You want to get that early in the trend because it's a continuation play. If the market seems really extended and just seems outside the average trading range, just back away. If you miss a trade, you miss a trade. There's always another one around the corner. And that's why I'm always preaching in our live trading sessions that it's about capital preservation and risk management. So the next move would be a pennant pattern, which I'm pretty certain that everybody is familiar with. So again, you need a directional move. You create this pennant, which you have one downside sloping and an upside sloping. There could be a pennant inside a pennant to give you an early trigger, but for this major pennant, you enter there, your stop goes behind the previous bar, and you let that baby run. But what's important is you've got a downside move. This, just like the trend reversal breakout, is a continuation pattern. You see this pattern, and you could very well get a continuation on it, although sometimes it breaks the upside. I don't think one is any more prevalent than the other. And then obviously an inverse, which I didn't put a chart aside for that, but you can get the inverse of the move up. You look for that pattern, create your trend lines across your pivots, and you take the breaks on those. So it's good for a reversal or a follow through. The next, which is very similar to a pennant, is a wedge. Really, the wedge is just a horizontal line with a slope either to the upside or the downside. You're looking for that directional move, then you create that wedge, and you could have either a break to the bottom of the top. It's usually a continuation pattern, where it's going to break to the bottom, but it can be a reversal pattern too. But once you see a wedge, you know that the trend has stopped, something's going to happen, and you could watch for a break to either side. And you can't say that, okay, I'll use this to decide that it's going to go one way as more often than the other. That's not the case. It's going to do one or the other. I'd say the probability may favor continuation, but not enough where I would just say this is simply a continuation pattern and negate the reversal pattern. And then another one that we have that is a pretty good reversal pattern, pretty reliable reversal pattern when you identify them well, is a head and shoulders. And here you need the move up for the head and shoulders. It's a reversal pattern, so you need to have a pattern to reverse. There's the move up. It creates the shoulder, creates the neckline, creates the head, finishes the neckline, finishes the shoulder, and you take the break of the neckline, which could be a more aggressive entry right here. Your stop can go right above the shoulder. It shouldn't bounce back and change the structure of the head and shoulders and go past the shoulder. Your stop can go right there. A less aggressive entry would be to go create this support line right here, straight across, and just enter on the break here. But I find this neckline break pretty reliable. You know, you hold a tight stop and you can get out pretty quick. Take it again. The other thing with these head and shoulders, you want to be a little conservative on your stop because you do get this last kiss right here. Comes back, gives a kiss to that line, and then takes off. So you're a little conservative with your stop. I don't think I would move my stop until I get that last kiss. I'd probably be about one off right here, just so I banked a little money, and then I'm playing with the market money if I'm going to hold it for the last kiss. So that's head and shoulders. This is a pretty good one. And when your eye gets comfortable, you're going to tag it right away. You're going to see it and get right in that thing and make your money. Cha-ching. And then you have an inverted head and shoulders pattern. Very simply, you have the move down. You get the shoulder pointing to the downside. Here's the head to the downside. Here's the shoulder to the downside, and then it rips right through. So you could have you could use the shoulder as the entry, or well, this one I'd say I'd use the shoulder as the entry. This one would have knocked you out. I mean, it's hard to find these patterns, but this got very aggressive, very choppy. I mean, sometimes the markets behave like that, and it would have knocked you out. But I would have taken the break again on here. Pretty good. I mean, this is pretty solid return. I mean, you could also just take this flag right here if you wanted to be more certain, and away you go. This pattern tells you that this is about to reverse, so that kind of will encourage you to either take the break of the shoulder, or if you got stopped out, you might still be encouraged to take that flag once again. It's not a perfect science, so you don't want to lose you don't want to miss the forest for the trees. So anyway, that's my trading patterns, and pretty much that's basically what we take. And hop into the trading room with me at 9 o'clock, and you could practice taking these, and it's best if you do it simulated, and you'll see how I do it, and you'll see the other criteria that I use to determine whether it's a good trade or a bad trade. But in my next training video, I'm going to teach you about when to trade these patterns and how to improve the trading patterns. So I appreciate you guys stopping in. Again, join me at 9 o'clock every morning for a half a day worth of trading, and we make our money first thing in the morning. That's the beauty of trading, and that's why we do what we do, because we want some time to ourselves. We don't want to be a slave to the 9 to 5 and a good quality of life, and that's why we're off-grid trading, so that free folk around the world could make some money nice and early in the morning, depending on your time zone, and have the rest of the day to really do what's important, with your life. So do me a favor and hit the subscribe and hit the bell so you know that when we load videos or we come online, you get an indication. And hit the thumbs up, because that goes a long way for the channel to help promote it. And if you want to support my channel, there's a PayPal app or a PayPal link in the description, and you can throw the channel a few bucks to show your support, or if you're not in a position to do that right now, just helping spread the word, there's a tweet handle in there. If you could tweet us out, help us get subscribers, that goes a long way too. So I appreciate it, and good luck.